mining companies have posted incredible financial results for 2021. Net profits soaring by 127%, with revenues rising by a decent margin as well, 32% for revenues. PwC has done its 19th annual review of the top 40 mining companies. Let's find out what exactly was found out by this. Andries Rousseau, PwC's Africa Energy Utilities and Resources Leader. This is quite a run, Andries. Good morning to you for mining companies. It's a lot of money they're pulling in. What's the cause of this?
Yeah, well, the rise in commodity prices clearly is driving the performance in the mining industry. They had a stellar year, no doubt about it, and revenue grew on the back of these massive price increases. So what is driving the price increases, I suppose, is a question that one needs to ask, and the energy transition is definitely part of it. The lack of investment in mining in recent years is also definitely part of it. So we're sitting with fantastic demand fundamentals, and supply is struggling to catch up, although they are starting to invest to get supply back up and running.
How long do we run this trend for, do you think? When does the bubble burst?
Yeah, that's a cyclical industry, and therefore there's ups and downs. There's no doubt. I think we've still got lots of legs in this, with a long run to come, because the energy transition doesn't stop overnight. I mean, we're talking about net zero in 2050, and mining will have to grow in order to deliver into the energy transition. And critical minerals, definitely not mined enough at the moment, and with increases of 2 or 3 times current demand expected in those, you would expect mining to be delivering or investing heavily with prices growing. The reality, though, is that although revenue will keep on growing, we're starting to see cost pressures coming through, and therefore the profitability might stay at these levels and probably not grow from here.
And I imagine one of those profit pressures that are going to have to be dealt with, a bit like a boiling pot that's about to boil over, is the wages in our country, isn't it? It's something that every mining company has to look at, because it's not just you and I looking at these numbers. Worker unions are going to look at these profits and go, fantastic, we would like a chunk out of that, wouldn't we?
Yeah, that's clearly part of the challenge. In our country, wages biggest input cost for the deep level underground mines. We look at it on a global basis, and that makes up about 30% or slightly lower than that. So wages and salaries is definitely a big input cost. There will be pressure on that. At the top level, employees are remunerated well on the back of share options in these companies, and production bonuses at the lower end. So, yeah, interesting. The other big input, though, is all commodity price driven. So if you think about open cast operators, diesel costs and how that's gone up, that certainly has a big impact on the input cost. And then reagents in the processing process, all chemicals, prices have really skyrocketed. So profitability will come under pressure.
Yeah, it certainly will, and it's going to put shareholders under pressure as well, put mining companies under pressure to try and get their stakeholder value out of this as well. Let's go back to the report where we talk about this energy transition. You've mentioned it a few times. I'd like to go there. And this future significant stakeholder value. It's all going to come down to these top 40 mining companies, Andries, taking a leading role in pushing that forward. What's the forecast, positive or negative?
Yeah, so the forecast, as I said, on the revenue side, very positive, and we expect that to grow. Profitability will come under pressure. The need for these top 40 mining companies and the whole industry really to step up to deliver critical minerals into the energy transition is clear, and it's key. If they don't step up, we just will be limiting, slowing the energy transition. And that's why we're seeing coal prices at record high prices as well. And in the transition, we all believe that renewables is the answer, but the journey to get there is probably not as clear. So expecting that even on the energy side, our coal miners will have to deliver for the future.
And then of all the trends that stood out, we've obviously spoken now about energy transition and stakeholder value. What other trends stood out for you before I say goodbye, Andries? What caught your attention?
Look, ESG is absolutely key, the social license to operate. There was a lot of focus in previous years on the E part, you can almost call it emissions, not environment. But big focus on getting all three aligned, so the environment, the social, and the governance part of it. And mining companies realize this. They need to invest to make sure that they build that brand mining. And they cannot operate if they don't have the social economics of the local communities on board. We see that those companies that invest in that will be sustainable and will do well for the future.
Yeah, it's a nice way of saying it. Social economics, enviro, social and gov, the three pillars really of any successful mining company around the country. PwC's Andries Rousseau, always good to have you with us as we talk about this net profit soaring in terms of by 127%.